Hello and welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. Well, we had an interesting final week of the year for our flows video. This is data through December 18th, 2013. We'll be back in a couple of weeks with a new video, but the way we're closing this year is a bit strange. You see on Wednesday, which is the end of our traditional close of fund flows data, we noticed that some distributions had been paid out to a number of equity and taxable bond funds, but Lipper had not yet received the final asset data for many of those same funds. So we saw what appeared to be outflows, but really just a distribution, but we did not see the reinvested amount, which would show up as a higher asset totals. So we're going to skip over some of the equity and taxable bond fund data today because it's just not going to be accurate in terms of investor behavior. It's really going to reflect a lot of lower asset totals due to distributions, which we have not finalized yet in our database. So let's take a look at our macro groups and see what the top line numbers tell us, and you'll kind of see what I'm talking about here. So up at the top, we have equity mutual funds with about $8.5 billion in apparent outflows. We know that a lot of this is distributions, but we're unable to verify how much just yet. In fact, some firms were still waiting on data for Thursday to find out where they actually ended up in terms of their final asset totals after the distributions were made. Similar story with taxable bond funds. We really didn't believe that $3.5 billion was pulled out by investors. Municipal bond funds, however, do not have the same massive capital gains capital gains distributions that the other two have. $1.7 billion is probably accurate. Similar story with money market funds. $31 billion in outflows is generally going to be about right, and they're not going to have the capital gains distributions either. But what we can do instead of talking about equity mutual funds is dive into the equity ETF data this week. For that, if we turn to our chart here, we're going to see that overall equity ETFs had outflows of about $4.7 billion this week. The Spider Consumer Staples ETF product, the XLP, was the leader this week with about $393 million in inflows. It was followed by the Financial Services ETF, XLF, which had about $214 million in inflows. And one favorite we haven't seen in a while is the Wisdom Tree Japan Hedged Equity. It placed third for inflows this week, about $211 million. At the other end, SPY had $1.5 billion in outflows, and that completely pushed the tables as far as total outflow figures this week. GLD, the gold ETF, was also a heavy selling mode by investors. Outflows of about $819 million on that product. We can also turn our attention to taxable ETF investors. They, again, just like ETF, equity ETFs don't face the same distribution issues that mutual funds do. And they had about $724 million in net outflows this week. The leader as far as inflows go was hardly much of a leader at all. The ultra short TBT product, which had inflows about $83 million. It was very light elsewhere. $40 million was tops for inflows for ETFs on the taxable fixed income side. The ones that had outflows this week included HYG with about $326 million in outflows, and TIP also had outflows, just about $110 million though. So fairly light activity on the bond ETF side. Well, let's turn our attention now back to mutual funds and what happened with municipal bond funds. They had $1.7 billion in outflows this week. That makes 30 weeks of consecutive outflows. Their year-to-date total now is just under $57 billion, about 56.8 to put a fine point on it. They've had 4 consecutive weeks of downside performance. This isn't surprising given the heavy influence of retail investors in this sector and how they've been selling one after another for much of this year. High yield munis led the leaderboard in terms of outflows this week, about $290 million pulled from them. The general and insured muni debt category also had outflows of a couple $100 million. Elsewhere, outflows were pretty well spread in terms of the assets that they managed. So nothing in particular was out of favor, just everything is out of favor. The final group to take a look at is money market funds. Again, they had outflows this week of over $31 billion. This was all due to institutional movements where institutions pulled $33.1 billion from their cash accounts. Retail investors actually found some money to put away. Maybe they're going to pay off those Christmas time credit card bills. They added about $1.9 billion this week to money market funds. So stepping back for a moment, the total outflows this week look to be over $50 billion. However, we know that most of that outflow was due to money market funds. Another sizable portion was due to distributions made to equity and taxable fixed income funds, the final analysis of which is not complete, and we'll have probably some interesting inflow data next week, assuming that all this is wrapped up by then. So we could see a bounce back in terms of flows data, which we, of course, will understand was just kind of an artifact of accounting and timing differences. So join us again, like I said, in early January for another flows video. Join us online at any time at lipperusfundflows.com. Thank you and have a good day.